With a compound annual growth rate of about 9% since the late 1800s, the US stock market has historically been one of the best creators of long-term wealth. However, actually realizing these potential profits is much more difficult than it might seem on the surface. Research data shows that the individual retail investor has consistently underperformed the market over the past 20 years. This typical self-directed style of investing achieved a dismal annualized return of 2.1%, as opposed to equities and bonds achieving an average yearly return of around 8.2 and 5.3%. Even though the market had exceptionally strong growth during that period, the majority of individual retail investors ended up barely making a profit. It might appear the odds are hopelessly stacked against you, but in reality there are powerful and effective ways for individual investors to gain financial freedom and build wealth over the long term using the strength of the stock market. One proven method to achieve this is through dividend growth investing. Investing in dividend growth companies can offer a continuous and ever-expanding stream of income that could also eventually cover your expenses and retirement if you stay committed and maintain a disciplined approach. Let's look deeper into dividend growth investing and how it might help you achieve your financial and investing goals. A primary incentive for the dividend growth investor is that dividends have historically been a major source of long-term market returns. Most retail investors tend to focus on share price appreciation, yet dividends accounted for about 40% of the Standard & Poor's 500 index total return from 1930 through 2021. And through the power of compounding, those same dividends would account for 84% of the total return if they were reinvested. Even when stock prices trend sideways or down, the dividend investor continues to collect dividend payments. The only way to make money when you buy a growth stock that doesn't pay a dividend is when the share price goes up. But while you're waiting and hoping for your investment's value to increase, the fluctuations in price can sometimes be extreme. For example, here is a price chart for Tesla stock from November 2020 through November 2022. As you can see, the price fluctuations have been severe, with a current drawdown of over 50%. Imagine if you had purchased some shares of Tesla. And then just prior to needing those funds for some planned event like buying a house, the value of your investment is cut in half. You've lost years of unrealized profits in a short period of time, and have nothing to show for all of your patience and saving. Instead, investing in a high-quality dividend growth stock could offer you consistent and increasing distributions, which you can then use to purchase additional shares, further enhancing your income stream over time. These dividend payments you earn are locked-in gains that cannot be reversed by a market crash. Furthermore, if you consistently reinvest your dividends into high-quality dividend growth stocks, you will remain in a stronger position even if the market falls, since you can lock in a higher yield by doing so at lower post-crash prices. Another advantage of dividend growth investing is that dividend growth stocks have outperformed the stock market over time. In contrast to companies that cut or eliminated their dividends, companies that grew or initiated a dividend have experienced the highest returns relative to other stocks since 1973 with significantly less volatility. It's not uncommon for institutional investors to be ahead of the general public when it comes to investing. Since 2008, institutional investors have poured nearly $88 billion into equity income funds, while individual investors have withdrawn nearly $99 billion from them over the same period of time. Clearly, professional money managers understand the advantages of dividend growth investing. The stock market makes it simple to accumulate money, at least in principle. Unfortunately, human nature, impatience, irrational expectations, and listening to the wrong individuals for advice can lead to overtrading, excessive costs, and abysmal underperformance in the long run. Fortunately, investing in quality dividend growth stocks can help you avoid these mistakes, since they can help you to perceive your portfolio as actual ownership of high-quality companies, rather than just a collection of digital symbols and arbitrarily shifting lines on a computer screen. To put it another way, investing in dividend growth stocks has the ability to transform you from a day trader, speculator, or gambler looking for the latest insider stock tip into a legitimate business investor whose portfolio reflects a real share of global corporate earnings. This is how you can achieve the type of growth in income and wealth that will lead to true financial independence. The main priority in this process is getting started as soon as you can, and then staying disciplined so you are able to capitalize on the rewards that come from being a dividend growth investor.